our base case is 650,000, but that base case was set before the SEC approved the Bitcoin ETFs. And so we are more convinced now that our bull case of 1.5 million by 2030 is the more likely case.
Welcome back to the channel. That was Cathie Wood talking about Bitcoin going to $1.5 million by 2030. Leave your thoughts in the comment section below. Do you agree with Cathie? Do you think we're going to see Bitcoin go to 1.5 million by 2030? But in today's clip, we'll be seeing Cathie talk about Bitcoin, how there's no way to shut it down. She gives some interesting information around crypto regulation and some other Bitcoin info. You guys check this one out all the way to the end. Make sure to like and subscribe to this video. It helps the channel and it pushes this video to new people so they can come and join the Bitcoin and crypto bandwagon. So check this one out. Leave your thoughts in the comment section below. Let's go ahead and play the clip.
When we started ARK, the two things we lumped back then, so this was 2014, were artificial intelligence and blockchain technology. But we lumped them into next-gen internet because they were both, even though AI has been around since the 50s, the very big breakthrough, the provocative breakthrough, was as a result of ImageNet and deep learning in 2012. So we were trying to figure out, is this important? Will this move the field of AI forward so that we'll have meaningful investments? So as I would say within the first 2 years, we separated next generation internet into artificial intelligence and blockchain technology. So they became 2 of 5 innovation platforms. The other 3 are robotics, energy storage, and multi-omics sequencing. These are the 5 major platforms that are evolving today, sort of like telephone, electricity, and internal combustion engine. Those were multiple platforms evolving at the same time about 100 years ago. Now we have 5 evolving. And again, this is unprecedented and, just pretty exciting. So Bitcoin was back then, 2011, and our first investment, and this was, we had to ask permission from the New York Stock Exchange. Can we put it in an ETF? And they said, yes, you can put this GBTC into your fund, but only 1%. And we said, great. They didn't say that it couldn't rise from 1%. And so we let it rise. And of course, so it moved from $250 when we got in September of 2015. So toward the end of 2017, I think it hit $20,000. It solves a lot of things. To us, Bitcoin means 3 things. 1, it's a new technology. Blockchain technology is a new technology. But to simplify it, all we're doing here is layering into the internet the layer that developers forgot to build in the early 90s because no one understood that financial services or commerce would take place on the internet. So I was there, and I remember agreeing with everybody, I will never put my credit card on the internet. This is not secure, right? And so they never built it in. So blockchain technologies of all types are an answer to that. This is peer-to-peer technology, taking a lot of middlemen out of traditional financial services, taking layers of fees out. And those fees are anywhere from 2.5% to 4% of any given transaction. That's the first thing, a technology. The second is it's a monetary system. So, and each one of these words is important. It's the first, global, private, meaning no government oversight, digital, decentralized, rules-based monetary system in history. It is a very big idea. And my former professor, now friend, Art Laffer, couldn't be more excited. He's about to turn 84, and this has rejuvenated him because he says, this is an opportunity to go back to the U.S. pre-Fed, so pre-1913, when we were basically using private money. So it will give the dollar a run for its monies. There's no way to shut Bitcoin down. And China tried. And all the activity that was in China just migrated. There's no oversight. There's no throat to choke. And it has proliferated to such an extent and is serving a really important role, especially in emerging markets, where people, of various countries, if their leaders either don't understand economics or there's corruption, and they lose purchasing power and wealth, to the tune of 50% in a very short period of time. Even this year, Egypt, I think it was the beginning of March, devalued the Egyptian pound by 40%. And so having an insurance policy like Bitcoin is really important in emerging markets. I mean, you've seen the corrections are violent because it is so early and so young. The corrections used to be 95%. Now they're more like 75%. That's a lot. So I don't want anyone to think that it's straight up and to the right, because the corrections are pretty violent. They're getting less so. And I think as Bitcoin moves more into mainstream investing, the volatility will go down dramatically. So it's not like we're saying it won't go down. It will. It's a new asset class. And there are a lot of, I would say, weak holders. They get in because of FOMO, so fear of missing out. And then they lose 20% and then they get out. They cut their losses. So that exacerbates moves down. So Bitcoin is backed by the largest computer network in the world, and therefore it is the safest cryptocurrency or crypto asset out there. It has not been hacked. The base layer has not been hacked. I don't think any other crypto asset can say that. So, this is like a giant neighborhood watch. You've got a lot of people whose livelihoods have been built on Bitcoin, starting with the miners in the Bitcoin ecosystem, and they are all watching to make sure that this ecosystem is as robust and hack-proof as possible. Gary Gensler, as I've said many times, has been a menace to our ecosystem and has pushed a lot of innovation associated with Bitcoin and other crypto assets into the rest of the world. So much so that many of the innovators who have moved to other parts of the world, whether it's Switzerland or Berlin or London or Hong Kong, Singapore, they will not deal with U.S. investors even. They think they'll be tainted because we are regulated by U.S. regulator. When you're a regulator, there's a lot of power seeking, and we know the history of the SEC and the CFTC. They've butted heads over the years, right? And we saw this during the derivatives, the evolution of derivatives in the 90s. And finally, with, I think, a Supreme Court ruling, they both regulate it, but regulate different parts of it. That is what I think was going on. There's a power struggle in the regulatory ecosystem. This is my purview. And so we may go to the Supreme Court again. I don't know. I think that was the main issue. Now there's something called regulatory arbitrage. And so that's what I mean by other countries very interested in attracting innovation are one-upping us. And I'll give you our first example. When we started ARC in 2014 was drones and the Federal Aviation Administration. So Amazon was on its 9th generation drone back in 2014, and the FAA would not let Amazon fly its own drones on its own property outside. It is only in recent months since that has changed. But in the meantime, one of the companies in our venture fund, Zipline, seems to have ingratiated itself with the regulators, meaning it has, what we've observed is it has taught the regulators, prepared them every step of the way, for what they were attempting to do. No surprises whatsoever. So the FAA did start opening up a couple of years ago to Zipline. Zipline has a pilot going with Walmart in the Dallas, Texas area to deliver parcels. So, and so Zipline beat Amazon to its own game, which is really interesting. So, but this regulatory arbitrage, other countries, so Amazon went to Hong Kong, UK, Australia, India to test out its drones. And then the FAA became a little bit more understanding. I don't know why they didn't give the green light to Amazon sooner, but they did start giving the